Well, friends, it's been a year of buying everything. This is the S&P's best year since 1997. This is gold's best year since 2010. And this has been the best year for bonds since 2014. And all it took was $5 trillion dollars in global liquidity. So keep in mind that the S&P 500 is up almost 30% and earnings expectations are down almost 5% on the year. Does that mean the market's going to crash? No. Just be mindful of where we are and be prudent and patient. So let's take a look. Before we go to the charts, let's do an update on the fear and greed index. Right now, we're sitting at about 93. The last time we checked in, we were at about a 91 or a 92, not quite sure, but we ticked up a few points. So we are near the upper end of that extreme greed. If you look at the lower portion of this chart, you can see that the current level, you got to go back to late 2017 to find a similar level. Now, does that mean we're going to have a crash, a correction, a bear market? No, not necessarily. Again, looking at the lower portion of the chart, the near bear market didn't occur until early 2018, and the lows were, I think, in about February or such. So this could last for some time. But again, we're at the upper levels, so that only means be cautious. So now let's go to the charts. So today we're only going to look at one chart, and it's the 2-year weekly chart on the Spyders, the S&P 500, the SPY. The close on Friday was 322.86. And really the important thing to take a look at here is from that low in late September, we've had a pretty good steady climb all the way up here to the current level. And most of that period, with the exception of this little itty bitty pullback, has been somewhat of a melt up. Let's go to the Mac and we'll look at that a little bit more closely. And you can see here that the elevation of the fast line and the slow line was about here, and that's about a 3.5, maybe 4 level at the time. And the fast line crossed through the slow line and headed on up. Both fast and slow line are above that 5. So there's a lot of power in that move. And you can see here when you have a melt up, basically you have a pretty consistent move in both the fast line and the slow line moving in parallel for the most part. Now, it started to accelerate here toward the end, and we'll see that here in the histogram. This is a relatively low rise move from that bottom here up through here. Low rise, say in comparison to here. And the other time we had a melt up was this time frame here. And it's just a very low rise, but a consistent march up the ladder, the price ladder. And that's what we've had here. We've had this little kick up in the end, so we'll see if that turns into some kind of a blow off move. But right now, it doesn't look to be too bad. It does look like it's going to continue on a little bit longer. And you can see that here in the price rate of change. That's elevated above the zero line. The fast line has come down here to the slow line. Now, I would expect there's a possibility that the fast line could go through that slow line, but there's also, I think, the greater probability that this does reflect back on up here. So it doesn't really matter here simply because we're above that zero line. So it's got some strength and it's continuing on. So I think we may get that reflection or it may come through, but we still have time for the market to continue marching on up. Here into the RSI, the relative strength, it's at 84.50. That's about the highest level it's been going all the way back that 2 years. So things are relatively strong. And it's not about to give up that strength yet. You can see here in the stochastics that the fast line is closing in on that slow line, but they're just moving in parallel with one another up in these overbought territories, and that again also can continue. You go back here into late 2018 and the fast line came through this low line and it continued on with the market heading higher while the fast line was below the slow line. So while the fast line here is above the slow line, I think things are just going to continue on. You're not going to have every day that's a positive day, and next week you might have a little bit of a pullback. But until we really see this fast line dive down below that slow line, as it did here in that late September, early October period of 2018, and then the plunge, you're not going to have a real pullback in the market until something like that happens. And I don't see that quite yet. It's coming, but I don't see it quite yet. Volume looks fine. And then the Williams is just hovering in that overbought territory because things are strong. Moving back up here to the price chart, right now, we don't see any sort of decline or weakening in the price chart. And again, we don't see much of that in the oscillators either. So it's possible to have another pullback like we had here at the end of November, early December, but that was just minor. So I think right now it's just telling me that at worst we'll have a minor pullback. But soon enough, we're going to have that topping process, and we'll see that. But until then, we're moving on up. And for today, that's ChewDog Charts. Thank you.